When you take a look at the dividend stocks in your portfolio, they all fall somewhere on a spectrum stretching from high yield to high dividend growth. Generally speaking, stocks with high yields don't tend to offer a lot of dividend growth, while those that do focus on dividend growth don't tend to come with high yields. And when building a portfolio, many investors tend to lean towards one end of this spectrum. Depending on their goals, they might prioritize dividend growth, or on the other hand, invest for immediate income by opting for high yield stocks. Essentially, it oftentimes becomes an either or scenario, but what if there was a way to get the best of both worlds? What if you could build a portfolio that has a high yield and still offers ample dividend growth? Well, that's what we're going to be doing in this video. We're going to build a 10 stock portfolio that takes somewhat of a barbell approach to dividend investing and comes with a high yield sitting near 4.5% with a super high double-digit dividend growth CAGR just above 10%. But before we get into that, in case you're new to the channel, my name is Ryne Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Now anyway guys, getting into it, our goal here is to build a portfolio that does three things. Number one, we want this portfolio to be paying us an ample amount of current income today, and we'll accomplish this by allocating a certain percentage of the portfolio for high yield stocks with yields that are about 4% or above as kind of the threshold we'll look at. And there are a lot of great ones out there, but I have 4 specific ones in mind that we'll take a look at in just a moment. But anyway, with this portfolio, in addition to current income from those high yielders, we also want to see dividend growth. So we're looking for high dividend growth as well as share price appreciation, looking for those capital gains. And we'll accomplish this by allocating a percentage of the portfolio for stocks with high dividend growth CAGRs. And for this, we're looking somewhere around 7% or above for the 5-year dividend growth CAGR. And these stocks also must have a history of generating share price returns that preferably outperform the S&P over the last 10 years, but if not, are pretty close to it. But anyway, the last thing we'll need to see in this portfolio is some diversification. Now, since we're limiting ourselves to only 10 stocks, which I know in a real life scenario is something you wouldn't have to do, but in this case, since we are, it'll be important to invest in stocks in a wide variety of sectors and industries. But anyway, getting into the high yield stocks, guys, the first one we'll be adding to this portfolio is Aries Capital, ARCC, which is a business development company that makes money by providing financing for middle market companies. And you might be asking yourself, what is a middle market company? Essentially, these are businesses that are too big to be small businesses, but also too small to be large corporations. So they're somewhere in the middle. And believe it or not, these middle market businesses account for about 1/3 of the US economy. At any rate, BDCs like Aries Capital will either loan money out or invest in these companies to help them grow and expand, or just to help them maintain operations. And these BDCs are often sought after for their consistently high yields. Taking a quick look at Aries dividend stats, we can see their yield is extremely high, sitting just below 10%. And for a high yielder, the dividend growth's not bad as well, just over 4%, but they're not really known for their dividend growth histories. There's only 2 years here, but if we look at the consecutive years of dividend payments, the track record's a lot longer. They've been making consistent payments for 18 years, and if we scroll down and look at this dividend history chart, we can see their payments go all the way back to 2006. They haven't missed a dividend since then. Anyway, our second high yield stock in this portfolio is going to be EPD, Enterprise Products Partners, which is a midstream energy company that has over 50,000 miles of pipeline that stretches all across the country, which they use to transport and store petrochemicals and natural gas products. Now, one thing that's important to note about EPD is that it is a master limited partnership, or an MLP. And it'd definitely be worth doing some more research into MLPs, but for our purposes here, the main thing you need to know is they come with an extra tax form at the end of the year called a Schedule K-1, which is what you use to report the income received from these MLPs instead of the standard 1099 from your brokerage. But anyway, looking at their dividend stats, they have a forward yield of 7.5%, which is a couple percentage points below what we saw with the Aries, but still, this is nothing to stick your nose up at. And there's really not much dividend growth to speak of. The 5-year CAGR is only 2.75%, but the dividend growth history is very nice. Seeking Alpha says 24 years, but I do believe they hit that 25th year. And then quickly moving on, the next high yielder we'll have in this portfolio is none other than Altria Group, which is a company I'm sure a lot of you guys are already pretty familiar with. They are a very high yielding stock with an 8.76% yield, a pretty nice 5-year growth rate actually for how high the yield is, and they are a dividend king. Altria Group has been growing this dividend for 53 straight years. Very impressive. And then the last high yielder here, you guys already know, we had to throw in some Realty Income, the monthly dividend company, and taking a quick look at their dividend stats, 5.4% 4.4% yield, very impressive there. Seeking Alpha says the dividend growth history is only 2 years, but I actually think it's closer to like 28, 29, maybe 30 years of dividend growth, so this is definitely not accurate. But anyway, those are all of the high yielders we'll have in our portfolio, and now we'll check out the high growth dividend stocks. There's quite a few of them though. We're looking at 6 stocks here, so we'll just quickly go through them and take a look at only the important stuff like the dividend yield, the dividend growth CAGR, and the total return against the S&P 500 over the last 10 years. And remember guys, share price appreciation is something we want to see from these companies, so we'll take a look to see how they've stacked up against the market. But anyway, starting here guys, these are all of the high growth dividend stocks in our portfolio. Like I said, there's 6 of them here. We've got Lowe's, Microsoft, Pepsi, Snap-on, United Health Group, and Williams-Sonoma. And as far as the yields go, they're all on the lower end, with Microsoft coming in the lowest, just under 1%. And as far as the dividend growth CAGRs, these are all looking really sweet, all above 10%, with the exception of Pepsi, who is coming just above our 7% threshold there with a dividend growth CAGR of 7.12%. And then taking a look at the total returns, just for reference, across the last 10 years, the S&P 500 has generated about a 217.5% total return. And if we compare that to our 6 stocks here, we can see that for the most part, all of these have outperformed the S&P 500, with the exception of Williams-Sonoma, who generated a 193.5% total return across the last 10 years, and Pepsi, who was just under 200% in the same time period. And with that, guys, those are all of the 10 stocks in our portfolio, and we can see the full portfolio right here. And regarding the third thing we're looking for, diversification, these stocks are pretty well spread out across different sectors. We've got financials, energy, consumer discretionary, staples, technology, real estate, healthcare. And the only sectors we don't have exposure to in this portfolio would be communications, materials, and utilities, but for our purposes here, I think we'll survive without them. But anyway, as we looked at earlier on in the video, this portfolio overall has a 4.4% yield, so very high, and the 5-year dividend growth CAGR is also very impressive, coming in just over 10%. Now in this example, we'll look at the last 10 years, so 2013 until today, including year to date. We're going to start with an initial contribution of $1,000 and then a monthly investment of $100, so $1,200 invested every single year. And by doing so, starting with $1,000 in each of these portfolios, after those 10 years, from 2013 till today, in our portfolio, you would have ended up with nearly $37,500 compared to the S&P's $29,400. So you would have outperformed quite considerably. Not to mention your best year would have been way higher, about 13% higher, and your worst year, you would have seen about a 7% less drawdown than the S&P's worst year. So that all sounds pretty good, but you may be looking at this thinking, you know, I don't know if 10 stocks is going to be enough for me. I feel like I need more diversification than that. And also, I don't know if I want to invest in something like EPD if I have to deal with an extra tax form at the end of the year. And if that's what you're thinking, then, you know, I totally understand and I've got you covered. I've actually made a second portfolio that is way more simplified and takes a hybrid approach between stocks and ETFs, and is also way more diversified despite only having 4 holdings instead of our original 10. As you guys can see in this hybrid portfolio, I swapped out all the individual high growth stocks for SCHD and made it 70% of the portfolio. And we also kept 3 out of the 4 high yield stocks with the exception of EPD, so no more having to deal with that K1. Now, interestingly enough, taking this approach, we'll see that the yield is actually higher. We're coming in at 4.9% compared to 4.4% in our original portfolio, and our dividend growth CAGR is a whole 1% higher than the original portfolio, coming in at 11.2% compared to the original portfolio's 10.1%. With the hybrid portfolio, you would have ended up with about $26,300 after investing for 10 years compared to the S&P's $29,400. So you would have lagged the S&P, and you also would have lagged our original portfolio by quite a bit. You'd have about $11,000 more if you invested in the original portfolio compared to the hybrid. However, where this hybrid portfolio does have the advantages in the dividend stats like we saw, and over time, that's going to result in more dividend income coming in from this portfolio compared to the original. And because the dividend growth is more substantial with the hybrid portfolio, the spread between these two over the years will continue to grow. But as far as building a portfolio that offers both high yield and high dividend growth, I think you've got a couple of really good options here. But with that said, I think some of the stocks that we looked at today are going to be a bit obscure, especially for the beginner investor. Like if you're just starting out, you would probably have no business investing in something like Aries Capital or Enterprise Products Partners, which is why I created this portfolio right over here that is perfect for someone who is brand new to investing. This 10 stock portfolio has absolutely crushed the market, and if you're new to investing, it should give you some pretty good ideas when starting your brand new portfolio. So click right over here to check it out, and I'll see you in the next one.